Traders at Axis Bank expect mixed sentiments in the T-bill secondary market as investors continue to cherry-pick high-yielding securities and also fund their obligations as speculators exit their winnings from the midweek auction. And then for the bond side, analysts also expect a weak appetite for bonds to persist. Daniel Afolabi, Treasury Team Member at Axis Bank, joins me now for more market movement. Daniel, thanks a lot for joining us on the show today. Walk us through the midweek 221 billion Naira T-bills auction, which was held on Wednesday. Let's also talk about the improved offers we've seen so far and the high yield and securities investors are cherry-picking at this moment.
Hi, David. Thanks for having me. So the midweek, we saw the DMO came to offer in the markets the NTB auction. We saw about 221 billion being offered, but eventually they only sold about 271 billion. Earlier in the week as well, we also saw the CBN came to do an OMO auction. The OMO auction, if you recall, over the past 3 auctions that we've had, we've seen them selling about 1 trillion, but this and the last one that we had is a different turnaround where they came into offer about 250 billion and sold about 500 billion. And then if you look at the rates, the long tenor of the NTB closed about 20.67, not quite different from what the last one was, while the OMO auction, the long end closed about 22.33%. So you see that disparity there, and then you'd also see that in terms of size of what is being sold, there's a reduction over the last 2 auctions.
Yes. Now, Daniel, just before we crossed over to you, now we were having a conversation earlier talking about the talks on the table as the National Tripartite Committee Minimum Wage and Labour meet today, and we're expecting an offer to be brought to the fore, looking at a new template for the minimum wage. This already begs the question of what sort of supplementary budget we'll see come to the fore. But what's your take on government's revenue generation strategy we've seen so far and debt management, especially when we're looking at borrowing and harnessing the markets?
Okay, so if you look at the initial budget, you would realize that the DMO has already borrowed significantly, which is why you're seeing the last 2 auctions where they are borrowing lesser and lesser. The last one, just like I've said, the NTB was about 278 billion that was borrowed. So, but the supplementary budget would bring in a different conversation. We're unsure what kind of size that would be, but that would also mean that government would need to start borrowing. In terms of how they would do that, the size that they would do, and what volumes they will be getting from the market is unsure about that yet. However, we're sure that once the supplementary budget is approved, it should obviously take into consideration what is being agreed by the labor union in terms of the additional costs that would be. The last conversation that we're hearing is also that the Minister of Finance is being asked to bring in what is the cost implication of this increase. So I'm sure what they'll be looking at is different scenarios as to if we actually agree to pay this amount, what kind of cost implication would that be? And if we cross over to do a higher one, what kind of cost implication would that be as well? So I guess once that is done, once we have a feedback on the kind of size that the budget would be, then we'd know what appetite the government would need to bring on the table in terms of borrowing.
Exactly. Now, wrapping up the conversation, let's also talk a little more about investors leanings and what to expect in the new week.
Okay, so the new week, I mean, if you look at the bond side of the conversation, it's been a bit quiet. We've seen and we are currently experiencing an inverted curve where the short and mid tenor is currently trading at about 19.85, but you see the long tenor trading at around 17 levels. So what that means is that investors are quite looking at what rates would be. There's a lot of uncertainty around the market, and also because of the liquidity crunch, there are several actions by the CBN taking out money from the markets, selling bills and all of those kind of things. So I think it's ultimately comes down to uncertainty in the market, liquidity crunch, as I also said. So we would continue to look at the market and see what the reaction will be for the market participants.
And talking about reactions from market participants, by next week as well, we are expecting the May pre-inflation forecast numbers to begin to come through, and how analysts also weighing the numbers and the likely moves we'll see from both the monetary and the fiscal authorities. We'll leave the conversation here for now, Daniel. Thanks a lot for your time at the show today. That was Daniel Afolabi, Treasury Team Member at Access Bank.